Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Asian stocks facing some headwinds from a stronger U.S. dollar, while bond yields are continuing to see some upside here as investors, positioning for a second Donald Trump presidency. Now, Republicans are on track for a clean sweep of the White House and Congress, with Democrats' hopes of flipping the U.S. House now starting to fade. World leaders, including China's Xi Jinping, bracing for Trump's return as his victory reignites worries over fresh trade tensions. Plus, along the same lines of geopolitics, cryptocurrencies riding this wave of optimism over Trump's win. We speak to stablecoin issuer Circle about the outlook for digital assets.
Well, after that historic comeback for Trump, certainly the Trump trades did go overdrive, and we are seeing a little bit of stabilization here in the Asia session. So we are still digesting the return of Trump, as Dave mentioned there. So there you go. You take a look at how the Bloomberg dollar index is going. We continue to extend some of those gains after the best day that we saw since 2022. You add that to that Treasury yield rally that we saw overnight, where the 30-year yield at one point surged some 20-something basis points, and that serves to be some hurdles for Asia today. We are seeing stocks falter a bit here. You take a look at how Japan is faring here as well, despite that weakness in the yen. We're talking about 154 levels right now. We have the Ministry of Finance's Nomura commenting a little bit more on these one-sided sudden FX moves currently here as well. So you are seeing a little bit more strength coming back, or at least recovering a little bit for the Japanese currency. But then again, you felt it in the yen, given that dollar surge overnight. You take a look at how also metals are doing here as well. Gold also coming down along with that VIX, what we've been seeing in volatility. So the dollar seemed to be too strong for gold in some ways here. We are back to around 2,669 levels. You're seeing things like metals, like copper, that are not doing too well here this morning. Oil, that certainly is one thing that we're weighing as well, what Trump policy is going to mean for energy markets as well. So yields are taking higher across the board in sovereign markets here in Asia, and trying to follow, I guess, some of the moves that we're seeing from the U.S. overnight. But really, it brings back to the question, do we bring back the 2016 playbook of Trump? And you are seeing that in some of these assets, right? If you take a look at these sort of America first, that really swept Wall Street overnight. So we're watching NASDAQ futures, which reached all-time highs. You take a look at S&P, also all-time highs as well. So the Mag 7 certainly did pretty well. VIX, we've been talking about VIX futures are coming down a little bit now. And also the Mexican peso, I mean, it was quite a reversal that we saw as well. Initially saw a lot of weakness, and then we basically backtracked everything. And Bitcoin, that certainly is the key beneficiary there. We hit that record high. We're coming off that just slightly here this morning. The approach to the open to China, certainly there's a lot of questions on how China is going to respond to the threats, of course, of what Trump has proposed as the candidate. Now we'll see what President-elect Trump will do once he does take office here when it comes to tariffs. But certainly we saw the yuan weaken the most in 2 years as well. We're talking about getting close to those 720 levels. And we really felt the brunt of the pain in Hong Kong yesterday, Dave.
Yeah, we were down 2-3%. ETFs were down overnight. I think interesting timing out of this UBS note, of course, out of James Wang and his team. He sees short-term downside. If we get to about a 5% drop, he sees this as buying opportunity. So I guess suffice to say, going into the open today, expect some softness there. Yvonne was just talking about the 2016 playbook. I think if you follow that just on the S&P 500, if you bought on Election Day 2016, you'd be up 6-7% by the time you get to inauguration. That's obviously a different world, different monetary policy, different geopolitics. You have two hot spots in the world as well. So on top of all of that, it's important to keep in mind that we are entering what is seasonally a very good time to be in equity markets, right? So November, December, and January typically are very good months as far as equity markets go. So you're up 2.5% on average in November. Santa Claus rally is about a 1% pop, and of course January is about 4%. Plus, on top of all of this, just keep in mind the Fed is also cutting interest rates, right? So what does this mean? I think the flip side is, what does it mean for emerging markets? Perhaps we need to start talking about this U.S. exceptionalism narrative back in vogue, as they say. Right. Let's get to some of the items, of course, that President-elect Trump and his victory speech in Florida. Have a listen.
America has given us an unprecedented and powerful mandate. We have taken back control of the Senate. Wow, that's good. And the Senate races in Montana, Nevada, Texas, Ohio, Michigan, Wisconsin, the great Commonwealth of Pennsylvania, were all won by the MAGA movement. They helped so much.
And Vice President Kamala Harris has publicly conceded defeat to Donald Trump. She spoke in Washington earlier, urging her supporters to accept the results.
Earlier today, I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power.
Let's bring in Bloomberg's desk editor, Jill Deeses, to talk a little bit about this remarkable comeback from Trump in some ways. And it looks like we're set for some sort of trifecta for the Republican Party as well.
Yes, that's right, Yvonne. So look, when we had the 2016 election versus Hillary Clinton, Donald Trump obviously lost the popular vote, even though he won the Electoral College. This time around, obviously lost in 2020, but this time around in 2024, he seems to have improved his gains pretty much across the board. He's not only winning the popular vote, also obviously took all 7 swing states that were really up for grab on the board. He's improved across all kinds of demographics, Latinos in pretty much every county and in pretty much every state outside of a couple. So you really are seeing that broad mandate in addition to obviously the Senate flipping Republican. We do still have to wait to see what those House races are going to look like. Probably not going to get final results because of some outstanding ballots in California for another few weeks now. But it does seem like, at least going into this, that Republicans really do have a charge. I do want to say, though, Yvonne, one thing that's been really interesting to watch with this election is that while these Republicans, the Republicans are ultimately set to take all of these, positions of government, it's not really that progressive policies across the board were necessarily unpopular, because you did see some states that, voted through certain, reproductive legislation, right to work, minimum wage mandates. But just in terms of actually the who is taking power here, it's a pretty phenomenal repudiation of the party in the White House here.
What does all of this mean for foreign policy, I guess, particularly with China, where we know publicly what Donald Trump has said as far as tariffs go, but in practice, what would that look like?
Well, David, I think that when it comes to China in particular, obviously we have seen, fairly bipartisan agreement over seeing China as a threat. I mean, look, the Biden administration, which obviously included Vice President Kamala Harris, did continue to enforce Trump-era, tariffs and restrictions. They actually moved to tighten certain, elements, including on semiconductors and stuff. Trump, obviously, though, has said that he would swing that in, a much more aggressive direction. I mean, we've all heard the statements about 60% tariffs. We'll have to see where that goes. I do think, the China relationship obviously is an incredibly critical one here to watch, considering this is the world's 2 largest economies. CNN has reported that Trump and Xi have actually already spoken at this point.
Yeah.
So I thought that was a really, really interesting line. I mean, in 2016, I mean, you had then President Tsai Ing-wen of Taiwan actually talking to Trump before kind of stirring up some concern over what exactly that would look like. But here, obviously, if Trump and Xi are already talking, I think that, says something really interesting about where this direction of travel is ultimately going. But we'll have to see how many of those tariffs actually go into effect. And again, if Trump has the entirety of Congress to essentially work with him and pass legislation that he wants, maybe it's not really that difficult to kind of move things along here.
Yeah, you got Elon Musk on board in some way. We'll see if that actually means a softer approach to China. Jill Deeses is there, Bloomberg desk editor, joining us with the latest. And as we were talking about, Trump's return to the White House does risk reigniting a possible trade war with China. Now, Bloomberg Economics says that Trump's threat to slap tariffs of as much as 60% on Chinese goods could end up decimating trade between the two nations. Let's bring in our chief North Asia correspondent, Ingles. He's in Shanghai and joins us now. Steve, you've been all there all week. I'm just wondering, what's been the sentiment, what's been the reaction to this U.S. election outcome on the ground?
I think they're pretty much ready for Donald Trump. That was a high expectation that he could return to the White House. And we did watch it, of course, yesterday at the China International Import Expo. A lot of people gathered around on the expo floor watching our iPad with the Bloomberg feed and coverage, and particularly when Donald Trump came out and declared victory. A lot of people were watching with us. Great interest, obviously, at a large trade fair, not only from American companies, but also the Chinese who were there. And I guess we really need to start looking at changing the dialogue to where can, if Donald Trump, and he's already said on stage there that he makes promises and he keeps them. So Jill just talked about that across the board, 60% increase on tariffs on all Chinese products. So the Chinese leadership and Chinese exporters clearly seeing that as not a remote possibility, a distinct possibility. So where can China then potentially retaliate? Because all indications I've heard, China will retaliate. But what levers do they really have? Yes, they can apply their own tariffs, particularly on agricultural products. They have export controls on critical raw materials. They're using that lever already. They have an entity list that they're using as well to sort of sanction key American companies. But again, the key probably has to be stimulus to kind of offset what could be a global market penalizing China, because it won't be able to retaliate to the tune, to the size of 60% tariff increases on all Chinese exports to the United States. So we have to kind of move in that direction. Where will China retaliate? The National People's Congress Standing Committee is meeting right now. They conclude that meeting tomorrow. Will there be a big stimulus package to help domestic consumption, to help exporters, cushion the blow? We'll have to see. Or there will be a next Communist Party gathering in Beijing next month. That could get some signs from that as well. Now, I talked to a number of people at CIIE yesterday, the trade fair, including the CEO of Royal Philips, the big medical device maker from Holland. The CEO told me this is coming, of course, off that big profit warning, slashing the annual outlook because of slowing growth in China. He's talking about the threat, obviously, of a continued slowing Chinese economy and slowing order book, but also, of course, potential tariffs coming from China on European companies because of the EV tariffs that Europe put on Chinese EVs. And again, Trump's threat for tariffs does not just include China. It could potentially include European companies as well. So this is what Roy Jacobs, the CEO of Philips, had to say, because China's and the United States are the number 2 and number 1 markets for Royal Philips.
One of the big elements of my plan was to ensure the supply chain is really resilient. And we have been making sure that we can supply regionally. So we supply China and Asia out of Asia. The same we do in Europe out of Europe and Central European region, and the Americas out of America. So that also actually we are prepared for any scenario that could unfold. But at this point in time, we don't see anything unfolding yet.
People I talked to was Al Gabor, the American Chamber of Commerce Shanghai chairman, and he said many American companies doing business here in China, they're sort of resigned to the prospect of continued lasting tariffs coming from the United States for products from China.
Yeah, better prepared this time. But yeah, maybe the stakes might be a bit higher. Steve, thank you. Our Chief North Asia correspondent, Stephen Ingles, with the latest from Shanghai. Of course, we're counting down the open of trade there and Shenzhen and here in Hong Kong. This is the China Show. Happy Thursday.
Welcome back. It's a strong dollar story, as you can see. 3-day look at the Bloomberg Dollar Index. At one point yesterday, we topped a significant high. You have to go back about 18, 24 months, give or take. We're also getting the fix of the day, which is perhaps also significant given the move up we've seen in the dollar against just about every single one of its peers. The strongest fixing, I believe, here, highest of the year, is what we're being told. How clean of a read, really, is the move in FX and rates markets overnight? Let's put that question to Francis Cheung, head of FX and rate strategy at OCBC Bank. Massive move into the dollar, Francis. Massive move out of treasuries. How clean of a read do you think that is What do you think the market's trying to interpret here as far as that's concerned?
Yeah, I think it would be worth to note that actually most of the so-called Trump-related trade movement happened during Asian hours yesterday, right? So including the sell-off in treasuries. However, when Europe came in and through New York section, what is comforting is that we see a fair bit of an early sign of stabilization. Granted, of course, the market is digesting the election outcome and the potential implications. But I think in the interim, the focus will also shift to FOMC decision tonight. So the question is how this election outcome is going to affect interest rates and thereby affect a lot of the currency pairs. At least when we look at past US elections before and after, there appear to be a kind of a continuity in terms of interest rates policies, monetary policy, and also a continuity in the broader trend move in short-term interest rates. That is to say, we think the Fed's interest rate cut agenda might not be affected to a large extent by this election outcome, and especially for the near-term implication. For example, tonight, I think the market and us are still expecting a 25 BP cut. And especially this time around, it is all more about monetary policy normalization in the US. We are not talking about outright easing. So near term, we think there would be a fair bit of stabilization, but in terms of effects, there might still be a bit of two-way trades.
Okay, but Francis, if I'm talking about potential tariffs from Trump, if I'm talking about tax cuts, that seems to lean more inflationary. I'm just wondering, there's this massive repricing that we're seeing in treasury markets right now that maybe the Fed might not be able to be as aggressive in its easing cycle. In fact, should we assume at least that this easing cycle will have to slow down given some of these policies that could come through from this Trump administration?
Yeah, the inflation impact really takes time to be reflected, and the impact is very indirect, right? So from tariffs, from the potential fiscal policy, etc. So if you look at market pricing, it is also very telling. In the recent 2 weeks, the pricing for this year has not really changed, but market adjusted a lot of the pricing of next year. Of course, we cannot rule out that the pace of this expected rate cuts would be constantly adjusted, but at this juncture, it is very difficult to quantify the inflation impact. And as mentioned, looking at the past cycles, inflation was really only one of the factors being affected by election outcome. More direct impact might come from the fiscal side. So net, I think that would support kind of a steepening bias of the curve, not to speak of the exact levels.
Yeah, and Francis, maybe one last item on the Fed before we move on. Do you think they should be worried about this melt-up in yields?
I think if you look at the yield, how the uptick in yields is, it was actually mostly engineered by real yield, for example, talking of the 10-year. And concurrently, you have the term premium going higher. If you remember, in October 2023, there was also heightened expectations about this fiscal worries, etc. And the term premium is not there yet. So that might be a little bit of caution that we may still see a little bit more upside to the 10-year yield. But we have to wait for the Treasury, right, US Treasury to be act and to see where the actual fiscal deficit is coming in order for the market to react further. And worth to note is that the overnight we have 30-year auction. The result is a bit mixed, but at least when yields were going to a higher level, then we see some investor demand coming back. So on balance, I won't say that the yield move is a one-way train.
We were just talking about that fix, the weakest since 2023 after this dollar surge for renminbi. I'm just wondering, do you expect the PBOC to come and support the currency in any way, just given now there is more of this heightened tariff risk, and that's being priced into this currency?
Yeah, we believe that the policymakers in China is very ready to prepare to really smooth the market if any move in the spot is disorderly. And let's not forget that NPC meetings are still ongoing in China, and it so happened that the dates is kind of designed to be that the announcement would be after US election results. So the expectations or the hope is that China policymakers would take into account of this election outcome and might be able able to prepare a bigger fiscal stimulus to kind of buffer or counteract any potential implications of tariff. And at the same time, in terms of the front-end monetary policy, etc., worth to note is that recently, PBOC also has just introduced another new monetary policy tool, right, which is the outright reverse repo, which also helped to smooth liquidity at the front end. So just now we talked about some steepening of the U.S. Treasury curve, and the China government bond curve may also steepen out of its own making. And in terms of the renminbi itself, if China is able to kind of stabilize the renminbi, it can also act as an anchor for regional currencies, because some of the currencies in the region also has a fair bit of correlation with the renminbi itself.
Right. All right, Francis, we'll leave it there. But Francis Cheung, there, head of FX and rate strategy at OCBC Bank. And take a look when it comes to the pre-market here in Hong Kong. Again, we saw some 2% declines across the board when it comes to the Hang Seng HSCEI there. Looks like we're extending those losses on this Thursday morning, just 24 hours after this election results or so. So futures are still in negative territory here. And we talked about 721 now for the weakness in the renminbi. Plenty more ahead. This is Bloomberg.
I almost forgot. We have trade numbers coming through today.
Oh, yeah.
Yeah. Well, I don't know how we forgot, because we've been talking about tariffs since yesterday, or this entire time, this approach to the elections. Can't believe we actually forgot about the actual numbers coming through later today. In any case, of course, stay tuned for those numbers to break. As far as, I guess, markets, we could talk about vol in a moment here, because that might be opening up an opportunity for bulls here, not just in the U.S., right? So this drop in China, UBS coming out with this note. We'll talk more about that. But solar stocks, and I think we have that coming up in your pre-markets, are one of the segments of this market that we're tracking very closely. At a very big drop, very sharp drop overnight. In fact, can we have a look at the solar stocks, please, if we can? And so apart from that, the next board, please, flip the page very, very quickly. That EVs in focus. BYD, for example, and XPeng, as you can see, seeing substantial downside here.
Yeah, so maybe there's the threat of maybe less progress when it comes to renewable energy under a Trump presidency. That's why there's some concerns in the solar side of things. EV, obviously, given the tariff threats out there as well. So we continue to see that sort of declines across the board. You take a look at when it comes to crypto stocks in particular, right? So this is, of course, seen as the Trump beneficiary of all, right? When you talk about that record high that was hit when it comes to Bitcoin, you're seeing it in some of these crypto-related stocks here today. So Huobi Tech is up 5.5%. OSL Group is also close to 8% gains right now as we approach that 75,450 level for Bitcoin. We got the open coming up next. You're watching the China Show. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets, and we continue to see some downside when it comes to futures here this morning. Hong Kong certainly continues to feel the brunt of the sell-off that we saw yesterday as the markets continue to digest the return of Trump and what this means for this part of the world. So we are down about 0.75% on the Hang Seng here right now. The dollar-China trade, obviously, we're now back to 720 levels. So one of the biggest moves that we saw yesterday in terms of weakness for the currency in 2 years. And today, even from the PBOC with that fix, it's the weakest fix we've seen since 2023. So not a whole lot of pushback, at least at this point.
No, yeah, they're letting this one rise, which I guess is why we're getting some headwinds coming through still in equity markets. And I think Yvonne brought up a very good point. When you do have U.S. stocks again looking on solid footing going into the next couple of months, seasonally it's also very good for U.S. equities. How much space is there really for dollar investors to reallocate back into emerging markets, right? So that's number one. Political, we're done with the elections. It was a clear winner. That bodes well for U.S. equities. What does it mean then, I guess, for foreign policy, particularly economic policy, as it pertains to China? So we are building on the losses yesterday. CSI 300 is up 1% now in the opening few seconds or so. Similar losses across some of the other benchmarks there. We're looking at yields pushing lower, China 10 and 30-year yields as far as what we're tracking, particularly in the China story. So we have trade numbers coming through today, plus we're still waiting for more details in that fiscal plan coming through out of Beijing. As far as the big moves into currency markets, so the weakest fix, as Yvonne is pointing out, since 2023, it's the first time we're trading above the 200-day moving average on dollar China. This is offshore. Onshore, we'll still see where we're trading on that, but since August. So in other words, we reversed a lot of the recent strength which has come through in Asian currencies. Hang Seng Index is down again. We were down substantially yesterday. As you can see, most of the big stocks on your boards are trading to the downside. A couple of stocks we're tracking going into this Thursday session. So everything from solar, for example, saw quite a substantial move down, seeing a similar move down about 5-6% in the early goings. Bitcoin hit a record yesterday. We're pulling back a little bit today, but certainly crypto-related stocks like Huobi are catching a bid, and Xpeng is really part of the broader EV story. Flip the boards, please. So we have earnings coming through. Galaxy Entertainment, Hua Hong Semi, SMIC are coming out with earnings today, and BYD, the reason we have that up, is car sales actually. We had data come through yesterday, very favorable numbers, 16% improvement in prelim retail car sales in October. That's year on year. So again, the encouraging bits and pieces of data coming through are fairly favorable, but of course the BYD story perhaps more has a sort of a more geopolitical overlay, not to mention, of course, what role perhaps Elon Musk plays in the Tesla story in a Trump White House.
Yeah. I mean, given his extensive business interests in China, does that mean he might have a little bit more
Could he be
influence?
the next U.S. ambassador to China? That's purely
see.
speculative on my part.
Yeah, but Trump's return to the White House is, of course, still shining a spotlight with his relationships with world leaders. And obviously, we've been talking about what some of these winners and losers could be, right? And the transactional sort of behavior that Trump kind of goes on with this. You know, you could see it could actually benefit the likes of Benjamin Netanyahu, the likes of, Vladimir Putin in Russia, for example. Of course, he has talked about wanting to end this war in Ukraine on the first day on the job, and also maybe ties with India as well.
Yeah, and I think with the Israel story, it's quite interesting because it's, we're almost, I think it's been a couple of years since the Abraham Accords under Trump 1.0 was actually first hatched, right? So what does it mean for the two hotspots in the world, Israel and Iran? The other one, of course, as it pertains to, and let's turn the page, please. I also think we have, there we go. I think one of the first to congratulate the president-elect was Vladimir Zelensky, of course. And, can Ukraine expect the same level of support that they got under Biden from Trump? And what does it mean also for the Europeans, which is, I guess, a separate conversation. And, of course, the Chinese conversation is also quite major. But we'll see whether or not Trump does deliver on those tariffs.
Yeah, let's bring in Bonnie Glaser, Managing Director at the German Marshall Fund of the United States Indo-Pacific Program. Bonnie, it's great to have you just a day after this historic election. And I'm just wondering, we've heard from what President-elect Trump has vowed during his campaign, which was blanket tariffs on China, the U.S. questioning their commitments to Taiwan, to even allies like with South Korea and Japan. How should Asia and the rest of the world brace for a Trump return?
Well, I think it's fair to say that U.S. allies are anxious everywhere, certainly in Asia. With the growth of Chinese power, most countries in the region, I think, want a stronger, not weaker, United States engagement and leadership in the region. And there, of course, we have heard some interest expressed in some circles in South Korea in acquiring nuclear weapons. Japan has been increasing its defense capability as they see a more complicated security environment, but they're very invested in the alliance with the U.S. Australia has put more and more eggs in the U.S. basket. And the Philippines, also a treaty ally of the United States, might not be willing to stand up to Chinese aggression against it in the South China Sea if they don't have confidence that the U.S. is standing with them and would fulfill commitments in the event that China uses force. So in other words, there's a lot of uncertainty, and I think Indo-Pacific countries will be watching very closely to see how Trump 2.0 is going to approach the region and U.S. allies everywhere.
Bonnie, David here. Maybe just to follow up on that, the extent of military support in the event we get to that conversation, which hopefully we don't. What about the aspect that, and we heard this back in 2016, is that allies will simply just need to pay more and foot more of that bill as it pertains to U.S. defense?
Well, that's certainly a given. The Trump administration will want countries to pay more for their own defense. And defense spending has increased during the Biden administration in many places in the world, certainly, of course, in Europe after Russia's full-scale invasion of Ukraine. We have a lot of countries in NATO now that are spending more than at least 2% of GDP. But we're seeing that in Asia, too. Japan's defense spending has risen, and Taiwan's defense spending is rising, too. It's now at about 2.6% of GDP. But Trump will demand more. I have no doubt that he will and his administration will expect countries to do more for their own defense.
How do you think China is going to respond? I mean, if there's a threat of tariffs here, do you think, people talk about there's a difference between the candidate Trump and what he will be as President Trump. Do you subscribe to that view that maybe this was all sort of just campaign rhetoric and that maybe he might have a softer approach on China when it comes to tariffs and use it more just as a bargaining tool?
I think that China is prepared for intensifying strategic competition in the U.S.-China relationship. They probably are fully prepared for Trump to impose higher tariffs on China. We know he's talked about tariffs as high as 60%. Trump could seek to negotiate another trade deal with China, or he might conclude that it's a waste of time since Beijing didn't purchase the American products that it pledged to buy in the phase one deal they signed when he was president. Instead, Trump could pursue a policy of decoupling rather than de-risking from China. I think the Chinese are fully prepared for the new team to more tightly enforce export controls on advanced semiconductors, for example. So I think the Chinese will wait to see what he does initially and who goes into his administration. At the same time, I think that we can assume that the Chinese will reach out to some U.S. businessmen that they trust, who they think can whisper in Trump's ear and maybe influence his policies.
Yeah, and I wonder who that could be, Bonnie. Well, you mentioned the Chinese might be waiting for what the president-elect might do initially. What immediately comes to mind when you said that was our reporting suggests that the Taiwanese president is considering putting a call in to Donald Trump. Well, two questions for you. Do you think Donald Trump should take that call, and do you think he will take that call?
Well, we know that Donald Trump had a call with the former president of Taiwan, Tsai Ing-wen, when he was elected last time. And according to interviews and books that people have written, he was quite surprised at the criticism that resulted from that call. I think he didn't realize that he was setting a new precedent, and he didn't understand how angry Beijing would be. And he wanted to build leverage against Beijing. He didn't want to lose that leverage. And it was after that phone call that Trump actually said, I don't have to reaffirm the one China policy unless, Beijing narrows the bilateral trade deficit and takes other measures. But at the end of the day, he did have to reaffirm that one China policy. So my view is that he's likely learned a lesson from that it is unlikely that he would take a call with Taiwan's new president. I think he feels he got burned the first time around. And my view is there are lots of things that the United States should do to strengthen ties with Taiwan We should do things that will meaningfully contribute to Taiwan's security, not things that are symbolic, that will simply provoke China to put more military, economic, and other pressure on Taiwan. So my view is no, he should not take that phone call.
Interesting. And I guess Taiwan is part of this whole story. You mentioned about the whole reshoring of manufacturing away from China. I mean, that basically is something that we've seen since 2016 already, right? Whether it's away from existing tariffs, COVID certainly, accelerated that sort of shift as well. The environment seems to be very different now versus 2016, Bonnie. And I wonder, I mean, trade imbalances that we're seeing in Southeast Asia with the U.S., for example, is that something that you think the Trump administration might focus on? And maybe some of these new allies of the U.S. could actually be more so targets now?
Well, even in Trump's first administration, there were partners, friends of the United States, not treaty allies, that were targeted with pressure because of their trade surpluses with the United States. And Vietnam is an example that comes to mind, and they're probably worried that they also might bear brunt of Trump administration pressure. There's no doubt that Donald Trump attaches a lot of importance to trade. He sees tariffs as useful. He thinks bilateral deficits are important, when I think most economists would argue that it's your overall trade picture that matters, not your bilateral balance with any particular trading partner. So I think that, yes, countries will be nervous, that there will be various forms of pressure on them. But as far as China is concerned, I think the Chinese are much better prepared this time around. Last time, they really didn't directly counter any of the nascent U.S. technology restrictions. They only responded with proportionate tariff increases. But now the Chinese have developed new tools that they can use to retaliate. They could expand restrictions on exports of critical minerals, which the United States and, of course, all of our allies remain very dependent on. They could implement other export controls. They could sell more of U.S. treasuries. I think they have a range of things that they could do to retaliate if they choose to do so.
Bonnie, do you think we'll see a meeting between the two presidents, President Xi Jinping and President-elect Trump, sooner before we think?
Well, under a Kamala Harris administration, we would have seen a priority attached to meeting with allies first. That will not necessarily be the case with Donald Trump. If he feels there is something that can be achieved in an early meeting with Xi Jinping, he values his relationship with Xi Jinping. He has said repeatedly that he respects him, that he thinks he's a smart guy, that he thinks that he might be able to reach some understanding with him. That we don't know. But I wouldn't be surprised if Xi Jinping, if he has a good understanding as to what Trump wants in advance, and he feels like he has a strong hand that he could play, maybe he would agree to meet with them. But there's a lot of risk involved, really, for both sides. I believe meetings between state leaders should be well prepared, but Donald Trump doesn't necessarily share that view.
Yeah, which I guess keeps us on our toes. Here we go, the next 4 years. Bonnie, thank you so much. Bonnie Glaser there, Managing Director at the German Marshall Fund of the United States Indo-Pacific Program. If you are one of our Bloomberg subscribers and clients, you can catch that interview in case you missed that, or some of the other ones that you may have missed in the last couple of hours or so post the elections, and as we try and dissect really what this means for markets, economic and foreign policy. Check it out, TV Go on your terminals. You can also join the conversation by sending us instant messages on our shows through the IB function. Check it out, TV Go. This is The China Show.
Let me tell you, we have a new star. A star is born, Elon. Now he is. Now he's an amazing guy. We were sitting together tonight. You know, he spent 2 weeks in Philadelphia and different parts of Pennsylvania campaigning.
Donald Trump there talking about Elon Musk during his victory speech in Florida. We certainly saw it reflected in Tesla stock when markets opened overnight yesterday. So certainly that's one thing. And it wasn't just the Tesla story, right? It was basically Mag 7. You talk about the NASDAQ hitting its first record high since July as well. So big tech certainly got a huge bid after that Trump win. Yeah, I mean, let's get more on this and perhaps what this means, because it's not just, you know, we saw tech, we saw crypto, we saw banks, for example, light touch regulation, I think, is one narrative that's really come out of that as well. But really, as it pertains to big tech and what that might mean under a Trump White House, let's bring in Annabelle Drewlers, our tech reporter, to take us through this. Yeah, like, and you know, where do we begin? Like, how do I wrap my head around how Trump thinks about big tech at the moment?
No, I mean, exactly as you say, I think light touch on regulation is sort of the key theme that's really come out of the markets. Of course, you mentioned that big move we saw in Tesla. It's not just Tesla, though, that's the big focus. There's SpaceX, there's Starlink, there's X. You know, there's a whole host of companies that Elon Musk has in his empire that now could stand to benefit, perhaps, from a lighter touch on regulation. And so we know that Elon Musk is someone who himself tipped around $130 million into this re-election bid, who campaigned, who offered a lot of free advertisements, I guess, or free promotion for Trump on his platform X. Now there's the question of what he gets in return. And Trump has indicated this could be some sort of official role, but we know it's going to be that emphasis on cost cutting for government agencies. That does mean that he could have some sort of indirect or link into how regulation is shaped in turn.
Yeah, and what about sectors like AI, for example? Are we likely to see a shift in attitudes in the White House?
Definitely, a shift does seem to be coming if you sort of contrast what we've heard already from Trump versus what the Biden administration put out, because President Biden is someone who introduced an executive order on this about a year ago, and it was really trying, broadly speaking, to put guardrails and safety regulations in place. Trump is someone who's criticised this for essentially being too heavy-handed. If you have too many rules, it can stifle innovation, and so he's looking to repeal a lot of this. J.D. Vance, for instance, is someone who could end up playing quite a pivotal role in this, and he himself has criticised regulation in the past. He's got those links to Silicon Valley as well, so it does seem like it's going to be, walking back what we've already seen in this space.
And on semiconductors?
Another area that is really contentious, and it's a little bit unclear as to where we go from here. So we have the CHIPS Act that's in place that was introduced in 2022, and it's about offering incentives to companies that will build a manufacturing presence in the US. So if you think about the foreign companies that have benefited so far, that's TSMC, Samsung, you can see just fairly flat today. But the big movers we saw overnight were the likes of Intel, Micron, that have also benefited from this spending so far, and also seem more poised to benefit from that sort of pro-America stance. The question as well, and you were just discussing it earlier, what does this mean for Taiwan? Another big question mark here. We know that Trump caused those shockwaves earlier this year in that interview, saying that the US had its chip industry stolen from it by Taiwan, and also that Taiwan should be paying for protection against China. So really, again, just very much uncertain where we go in the semiconductor industry in particular.
All right, Belle, thank you. Annabelle Drewlers there on what this all means when it comes to big tech as well. We're watching some of these Chinese markets as we get to this this break here right now. And you are seeing it's a mixed picture, but at least Shanghai's doing a little bit better. But yeah, Hang Seng, we're coming off some of the lows already there, but still in the red this morning. Yep,
plenty more ahead. We're awaiting, of course, trade numbers to come through and whether or not these gains can sustain themselves. We're also getting some word here around state banks intervening in the currency market. Light touch, though, as far as that's concerned. This is Bloomberg. Right, you guys are just in time for this for a market update. Before we talk about equity markets, the strength in the U.S. dollar has certainly been one thing we're tracking. So this hour, the weakest fix out of the PBOC this year, but that doesn't mean they're letting this one go as freely as one would think based on that headline, because we understand that traders have told us that state banks are actually now in the market selling dollars to maybe cushion some of the strength that's come through. And I think we also actually saw this yesterday, just smoothing out some of the flows. But all that being said, at 720, we're back to that level. This is offshore, which means we are trading back above the 200-day moving average on this specific pair in the FX market.
Yeah, it's interesting. You talked about that UBS call. So James Wang and his team are basically saying, look, there probably is some near-term downside when it comes to Chinese stocks on this Trump victory. But then again, he still says it could present a buying opportunity. He says, really, the market does not really believe at this point that those 60% tariffs will be fully implemented, though. And so at this point, they remain positive, but they believe maybe about 5% pullback we might see. And maybe it's time to buy on that dip.
Yeah, well, they don't seem to be in the same camp as Morgan Stanley. You've actually put out also a separate note just now, too. And this is Jonathan Garner and Laura Wang and their team there. And I think the broader message from Morgan Stanley is similar to what we saw. I think it was Goldman Sachs in Europe, which is a slow growth story.
Yes.
Goldman has now added one additional rate cut from the ECB next year because they think the trade conversation weighs on global growth. In the same way Morgan Stanley says, we're still underweight China because of the growth story. So lots to unpack there, of course, coming out of these elections.
The tariff headwinds could actually discount what we could get, the net effect of potential reflation measures or any sort of domestic stimulus that we're seeing. So that's why they're saying underweight still for Chinese equities, overweight Japan, Australia, and India, though that certainly is still their call. HS Tech, there you go. We're down about 0.6%. We're continuing to see that downside in Hong Kong. But yes, we're watching very closely what happens with the currency. And yeah, yields are also ticking lower here in CGBs. You're watching The China Show. Welcome back to The China Show. Here's a look at the CSI 300 a half hour into the session, and it really is doing a little bit better, I have to say, than Hong Kong. But there you go. We basically have reversed some of the earlier losses there. We're flat in Shanghai here right now, but that doesn't really tell us too much. I think markets are still waiting, right? So we got through the election. Yes, Hong Kong did bear the brunt of the declines yesterday in Asia, but we're still waiting for the MPC and what could come out tomorrow.
Which many people say is still the, to borrow a pun intended, the trump card for China, right?
Yeah.
It's the number one factor that will drive equity markets in China, depending on what that number looks like, right? So it trumps Trump, but it depends what Trump does in tariffs.
Yeah, I think Goldman Sachs last week said it, right? If we see steeper trade restrictions on China, that may force President Xi's hand and actually boost domestic consumption, which is something that the party has not done. And has tried to avoid as well. So will we actually see more direct support to the consumer is certainly one big question that we're looking at. But yeah, those Trump trades we're still tracking, right? It seems like things have stabilized a little bit, but they certainly went euphoric in the last 24 hours.
Yeah, especially the dollar story, right?
Yeah.
It's dollar-yen saw a massive move up. I think the drop in the euro, I think we have a story, in fact, on the euro is parity now at play, given the drop we had in that specific pair. The Bitcoin trade, of course, we're pairing back a little bit to Yvonne's point, but, you know, we're trading at 75,000. And before you know it, you blink your eyes, we're at 80,000, for example. 10-year yield, this melt-up continues. So the 10 and the 30-year yield in particular, so the steepening of the curve, it took place overnight in dollar China. And we're starting to see, today is day 2, we're starting to see the PBOC, while it's looking to maybe let this move on the fixing reflect what's happening in the markets, we understand traders have told us, too, that state banks are intervening in their currency markets by selling dollar to maybe smoothen out some of these FX moves here as well.
Yep. And when it comes to ex-China, this is how the rest of the region is doing here this morning. So obviously there's been the weakness in the yen that has stabilized a bit, but that's not really helping Japanese stocks.
It helped yesterday.
Yeah, it helped yesterday in a big way. Taiwan's actually turned positive. We're up about 0.8%. Perhaps that is that sort of big tech play that is catching a massive bid that we saw overnight with the Mag 7 that's helping Taipei this morning. And as you mentioned, Treasury yields are stabilizing a bit right now. So are U.S. futures here. But we have to talk a little bit more about the U.S. election result now and how Donald Trump is gearing up for a second presidency. Let's bring in our senior editor, Bill Ferries, now. Bill, for one, I want to know, how do you think Trump was able to pull off such a stunning comeback, for one thing? And how should Asia and the rest of the world really prepare now for the return of Trump?
Yeah, when you look at the last 3-4 years, starting with that attack on the Capitol building and the legal challenges former President Trump, now President-elect Trump, has faced, it is one of the historic comebacks in American political history. He did it by capitalizing on what the biggest concerns of voters have been for more than a year now. And you look at the exit polls. You had over 70% of people saying they didn't think the United States was on the right track. The COVID restrictions left a hangover with people. The COVID economy left a hangover with people in terms of inflation. Inflation has come down, of course, but the prices are already higher than what people were accustomed to them being before 2020. So whether he's able to enact it all or not, Donald Trump came out with a plan that addressed it. And I think his biggest attack on Kamala Harris was, if this is her idea, if this is her these are her proposals, why haven't they enacted them already? And I think for Harris, it was a very difficult position to be in terms of how much she could realistically break with Joe Biden. And it shows in the results, where Donald Trump picked up support among black men, Latino men. Kamala Harris didn't see a big pickup in female support. So Donald Trump outperformed almost everywhere. Kamala Harris underperformed. Even in places where she won, she underperformed.
Yeah, Bill, I'm glad you brought up the inflation factor here. I guess not a lot of people talk about it as much as we should, because this year hasn't been, we were going into this year, it was a big election year, and now that we're almost done with it, we look back and go, oh, the incumbents mostly across the world did not do very well. And I'm wondering whether that is inflation related, whether that's in Europe or in Japan. But I guess the reason I bring that up is, how much does the domestic economy, his policies around the domestic economy, how does that affect what he wants to do from a foreign policy perspective, like tariffs, for example?
Yeah, I think he's put forward this economic plan where he said he's going to give a lot of tax breaks to people. If you're a waiter or a waitress at a restaurant, you're going to get a tax break on your tips. If you're taking care of an elderly parent at home, you're going to get a tax break on some of your expenses for that. I think that did resonate with people who are looking around at their monthly household budget and saying, listen, I just can't afford a lot of the same things I used to be able to afford, or I'm having to cut some things out of my budget. And I also think I wouldn't underplay the foreign policy aspect of this. It was the support for funding for Ukraine, for example, was very divisive in the U.S. Congress, but in the U.S. Society as a whole. I think when some Americans looked at over $100 billion going to Ukraine, they wondered what that might do to benefit them if it stayed at home. I think that played into the election.
Yeah, and I think he mentioned that he would be able to end this war within 24 hours, and we don't even have to wait until he becomes president. But I think we can table that for now. Bill, just very quickly, markets reacted very, very well. What about the notion that a Trump White House would be very light touch in regulation and very pro-business?
Well, I think Donald Trump has signaled, and his supporters, when you look at people like Elon Musk and John Paulson, they have signaled that they want to see regulation cut back. I think that was a hallmark, at least an attempted hallmark, of Trump's first term. I think there's this feeling that he is, especially when it comes to energy production, for instance, they're going to try to loosen the reins on that, even though energy production's at a record high already. But the idea is to kind of go after what Trump sees as constraints on the economy. And I think the stock market reaction in particular reacted to that.
Bill, thank you. Bill Ferries, our senior editor in Singapore for us. And to the point we were just making there, right? Equity markets, new record on the S&P. The NASDAQ is again at all-time highs. The VIX, and we're borrowing this phrase fantastically coined by our colleague Joe Weisenthal, VIX vaporized.
I love it.
2 standard deviation drop in the market fear gauge. Are the bulls out and about going into this Santa Claus rally, which, if you look at historical data, suggests we are entering a very bullish next few months for equity markets. Gareth Nicholson is with us, CIO, Head of Discretionary Portfolio Management at Nomura. Gareth, this massive move into risk overnight, do you think that was because, how much of that was a Trump win, or how much was that how he won, that this uncertainty that markets are pricing in over the next few weeks has now just disappeared because it was such a clean win?
Absolutely. I think that's personally a big surprise, but we must recall that coming into this election was razor thin. Maybe if we look in hindsight, the polls did suggest that Trump was leading most of the time, but a lot of investors coming into this, given that this has been a fantastic year for equity markets, for most markets in general, gold, a lot of participants took some money off the shelf, kept some flexibility, but kept their fingers very close to the button to pull the trigger as soon as we saw more color. And as soon as we saw past the 260, 270 number, when there was a high conviction that Trump was the president, we started seeing these moves really come through. And as we start seeing potential of a red sweep, it's still unknown, we're going to see another a big push forward in this. So at the moment, it's all about the momentum. It's about the Trump trades, where the momentum is, and driving the momentum. Then it's going to get interesting when we start seeing the Trump timeline play out as we get to inauguration, 20th of January, and the policies actually come in. So it's a very, at the moment, very fluid market. People are very active.
The narrative now seems to be that a Trump win means pro-growth, pro-deregulation, pro-markets, Gareth, as you highlighted. But it's interesting that you mentioned that timeline. I'm just wondering, does it only bolster this whole America first sort of trade, that U.S. exceptionalism is here to stay?
Well, I think it's going to be mixed. I think next year going in is going to be trying to find the predictable income in what it will be pretty unpredictable. It's unlikely we're going to get all the policy done straight away after the inauguration. We know tariffs is right up on top of the agenda, and that's one of the easier things to get through, albeit nothing's easy. We do expect tariffs to be up in front. We do expect support for some of the big sectors, some of the sectors he talked about, America being great, space, AI, tech, energy infrastructure, those kind of spaces, we believe are relatively low-lying fruit, and that will come through. Now, obviously, market has already started pricing these in, but when we see the actual execution of these early next year, then I think there'll be that extra support. Right. When it comes to things like inflation and the policy, being more inflationary, I think that's going to be a little bit slower, and we're going to have a bit of a reversal in some of the rates moves. We're going to see that playing out only later when it flows through to the data. So there's going to be a lot of movement next year, and it's going to be a real challenge to time around the market. Obviously, it's more important to be in the market than to time the market, but there is going to be definite opportunities for active management.
Okay, well, so where do I want to be right now? So over the short term, you have an investment playbook out right now. So short term, I see short China, for example, or the currency, long India. Just take us through the thinking there, Gareth.
Sure. Some of our higher conviction calls at the moment would be, given the tariffs, given the pro-growth policy, given the immediate reaction, we do like U.S. equities, particularly in the sectors which has shown a lot of support. We do like Japan. We do like India. Those are some of our higher conviction calls. We're less constructive on China and Europe. I think China will get a tough time in the shorter term, but as you highlighted, the central bank is already aware of this. They have their own playbook. This is not the first time China's had to deal with tariffs, so I think that will see not as much of a longer-term pain than potentially something like Europe, where Europe is facing huge differences. Firstly, the policy difference is going to be very different. You're going to see a difference in the currency. You're going to see tariffs. Europe hasn't had this sort of attention as much as China has, and I think that's going to weigh on market sentiment. It's definitely going to weigh on European growth as well. So those are two areas, particularly in the equity, where we're going to see a fair amount of pain. In the fixed income, there is still going to be a lot of movements around the curve, around inflationary fears. We do expect the Fed to cut less in 2025 than we did prior to the election, but we still expect another 25 in November and December. And that, I think, will calm some of this extraordinary moves we have seen. And we will have quite a volatile rates market. And it really will be an investor's focus on trying to find that level that they can lock in longer-term yields using the volatility.
Yeah, can you talk through that Fed call a bit? Because it seems like I think Nomura had some numbers, right? That inflation would actually go up some 75 basis points higher in 2025 under a Trump presidency. Is there a much higher risk now that the Fed is going to have to respond to later on, I guess in 24 hours or so, in that press briefing on what a Trump win actually means for inflation, and for one thing, and you know, is there a risk now that they're going to have to be hawkish when it comes to these rate cuts?
Well, I think the immediate meeting, there's going to be little talk on policies going forward. I think they're going to focus on the current data, where they are, the trajectory they have. We believe this will flow through to the numbers between now and the December move as well, and the Fed will be very conscious of that. I think as you go into the new year, as there is more color around what will be executed, I think the Fed has that optionality that they can slow down the pace. They don't have to go at, most people, including us, were more like 4 rate cuts in 2025. Now we're at 1 rate cut. So we think the Fed is going to use the opportunity to digest and see what the actual implications are. As we know, tariffs can be inflationary. They're not always. We're also going to see how the funding goes in the US, how that affects the curve. So I think it's a bit more of a wait and see. The Fed is going to create that optionality in their speak. But at the moment, the market, I think, is run extremely high, exuberant levels. And whilst it still has some legs, there's going to be active opportunities in there when we see a bit more of a calm in senses.
Gareth, what haven't we talked about? What are we missing right now? What else?
The other two were what? We've touched on equity, we've touched on rates. I think FX is going to be very interesting because we are now talking about rates higher for longer. The terminal rate is something that's going to be rehashed out for a lot of banks. Dollar strength is going to be around for more. And we're going to see things like Asia FX struggle for a meaningful amount of time. We're also going to see, which I think is very important, is the geopolitics kick off again, particularly in the first quarter, maybe even the beginning of the second quarter. I think there'll be another reshift back to geopolitics and the US stance, the Trump stance around that. And given that uncertainty going into next year, we think the safe haven trades like gold will remain strong. We've had a little bit of a sell-off in gold. There is still a lot of tailwinds, structural tailwinds, central bank tailwinds behind gold, and that is a space that we still believe earns a lot of positioning in portfolios. Our current mandate, a balanced mandate, what would traditionally be a 60-40 mandate, has 21% in alternatives and almost 6% in gold. And we're still happy with that, even at these levels.
Gareth, great to have you. Gareth Nicholson, the CIO and head of discretionary portfolio management at Nomura. I think we covered everything. All right, still ahead on the China Show. We are at the Singapore FinTech Festival to get the outlook on crypto under a new Trump administration. We have Circle's chief strategy officer joining us live a little bit later on.
But ahead of that, how Beijing may respond if Trump delivers on his promise to raise tariffs. We're live to Shanghai next. This is the China Show.
Today, the Fed decides.
Is this a Fed just dealing with debt and deficit?
It's about the election. It's about the Fed, especially at a time where you have those yields creeping higher.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We now see the risks to achieving our employment and inflation goals as roughly in balance.
We've got a statement, a decision, and a news conference.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared than in dealing with him again. So I don't believe this strategy, first of all, will become a reality. But even if he tries to threaten China with economic, means, I think we're simply well prepared.
And that was Zhou Bo, a retired senior colonel of China's PLA and a senior fellow at the Tsinghua University Center for International Security and Strategy. He was speaking with us before the elections in the U.S. But certainly on that very note, he kicked off this conversation around how this relationship is probably going to evolve these next 4 years. Stephen Engel, our Chief North Asia correspondent, joins us from Shanghai with more, Steve, on really what a second Trump presidency means for this relationship.
Yeah, I was out at the China International Import Expo here in Shanghai the last couple of days, including late yesterday as we got those returns, as it became very clear that Donald Trump would be returning to the White House. And then, of course, and he said, as he basically declared victory, that he makes promises and he keeps them. So his big promise as it relates to China is that 60% across the board tariffs on Chinese goods to the United States. Now, there's always room for negotiation. Donald Trump likes to think of himself as a great negotiator, so there might be some mitigating factors there in negotiation. But again, there is the very real possibility of a Trump-China trade war version 2.0. And that's what a lot of people were talking about yesterday, including I spoke to Jason Heffmeister. He is with the U.S. Department of Agriculture. And I talked to him essentially about how trade flows were altered during the first trade skirmish, if you will, that started in 2018, in particular when it comes to agriculture. This is what he had to say, as well as the American Chamber of Commerce chairman here in Shanghai, Al Gabor. Let's hear from them both.
China paid more for food than it otherwise would. The United States found other markets, or we had government payments to help compensate our farmers. And so while both sides got through it, we both incurred costs. And so I think one of the lessons going forward for both of us is, can we manage our relationship where we can avoid those costs?
What can companies do? Frankly, this is the competitive boot camp of the world. If you can make it here, my guess is you're going to be successful in many other places. So, yes, it's tough. It's also important to figure out how to win in a market that has so many middle-class consumers that need the kind of products that our companies manufacture and provide in China.
You know, Dave and Yvonne, we heard from that former Chinese official speaking just before you came to me, talking about how China is more prepared now for a potential second trade battle with the United States and the Trump administration. That is true, because they did alter their purchases, perhaps, of agriculture products, not from the United States, to places like Brazil. Brazil now is the biggest source of corn and soybeans. Those are two huge agricultural products that the United States has been selling into China. In fact, China has been the #1 source for U.S. agricultural products over the last 3 years. But even Jason there told me that this year the USDA projections are China will fall down to #3 because of the slowing Chinese economy and the slowing demand of those products. But also the Trump potential tariffs will add even more uncertainty about U.S. ag market products going to China.
Yeah, Steve, do you think how much, I guess, capacity does China have to actually retaliate against potential 60% tariffs? I think we've talked to a lot of guests that say China's quite limited, given that this trade relationship has already diminished for a few years now. I don't think they've signed contracts with Boeing for many years, for example. So they don't have that much leverage. Are there other ways that they can actually respond? And is it more domestic, that they might have to just implement more domestic stimulus to actually counteract all this?
Yeah, I think all of the above, including sourcing some of those agricultural products from elsewhere, like Brazil, like Australia. That trade dispute has pretty much been resolved. So the United States farmers in those red states could be feeling a little bit of the pain, as China does not order as much for them. So that's one lever they can obviously use, and they have used. They also have, export controls on critical raw materials that they're starting to use. Rare earths is for one for the tech companies in the United States. I mentioned agricultural goods tariffs, but also they have that entity list that they apply potential sanctions on key U.S. companies. That's something they could do. But again, China is such a big market. Yes, it's a slowing economy, but they still need to eat. So maybe diversifying that agricultural procurement to other nations is one particular lever that they can use most immediately. But again, I agree with that former official from China. China has had time to prepare how they're going to potentially retaliate, because Donald Trump has telegraphed that he's going to do this. He might negotiate it down with China, but still, he says he comes through with his promises.
Steve, thank you. Steve, there, Chief North Asia correspondent Stephen Ingles. We got plenty more ahead. This is Bloomberg.
Right, some of the Trump trades showing up, in fact, in the Asia-Pacific. So shipbuilding stocks, or shipping-related stocks in South Korea, I guess a more general term here, as you can see, on the way up substantially across most of these names here. Really on the prospects, I guess, of a cooperation between Korea and the U.S. as it pertains to ships. Trump did tell his counterpart there that the shipbuilding industry needs South Korea's help. So that might, and that's according, by the way, to the South Korean president's office. So watch that closely. The other one, of course, is Tesla and some of its suppliers trading across the region. I guess someone who is affiliated with Tesla, one of the employees there, might have, has acted as a bridge in many ways. Very close, of course, Elon Musk. And as you can see, it's playing out across these markets. Plenty more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets are going to that lunch break in just a moment here, and you are seeing not a whole lot of risk, but it's a bit of a, I guess, Topics is doing well, but the Nikkei is actually going the other direction here. The yen sort of weakness that we saw seems to be gaining a little bit more footing here. We're at 154, I should say, reversing some of those earlier losses there. So, but we're still talking about 154 levels for dollar yen. And we did hear from some officials about the one-sided moves, they're calling it.
Yeah, so we're starting to see early signs. That's a good point. Early signs of, I wouldn't say verbal intervention, but certainly the direction of travel is towards, some of the more forceful language coming through from Japanese authorities. And it's unsurprising because, say, for example, the 10-year yield in Japan hit 1% for the first time since, I think, July or August. So that might be an indication maybe where rates go. We'll talk more about the rate story in a moment here, what a Trump presidency is might be starting to have as far as the rates outlook is concerned. Just a note, too, while you look at the region here, the 0.4%, most sectors are up. Most markets have actually started to come off lows. I think Hong Kong and China have reversed completely. CSI 300, to be more specific, and the Hang Seng Index have reversed the early weakness. Volumes are very light still in Hong Kong, about 30% lighter than usual. The opposite is true onshore, where turnover in China, an hour into the cash market session, has already topped 1 trillion, and we're now poised for a 27th straight day where turnover has taken out this sort of psychological milestone of about 1 trillion. And yeah, suffice to say, interest in this market remains heavy, and in anticipation of what could be announced out of Beijing, and that meeting, of course, which wraps up tomorrow. Right, now back to the rate story. And we have the Fed, of course, coming up in less than 24 hours from now, what they will do, and especially what questions they will take around whether tariffs are inflationary and all these other implications. Now, the return to the White House certainly is wreaking havoc across rate cut expectations around the world. Let's bring in Katya Dimitrieva, our Asia economics correspondent, who pens this story and how it changes the picture, really, as we look ahead into next year.
It definitely changes the math for a lot of central banks, and it depends on where you are in the world. I mean, you could be like China or Europe, where this means that you're going to want to cut faster. You're going to want to try to stimulate growth because of the impact of tariffs. I mean, the context here is really important, too. You have central banks globally cutting into what is still pretty strong economies and really strong labor markets historically. And you also have, I was reading a UBS note that something like 63% of central banks are still not meeting their inflation targets. So that's the context. And then you add on top of that potential for inflationary tariffs. Yeah. And then the offset of that, and this is, by the way, what economists have been grappling with for months, is what does a red sweep mean? Because you do have those two different effects. You have the economic weight of tariffs, and then you have the potentially inflationary boost from tariffs in the U.S. and from this dollar strength. So it's really a mixed bag. What it means for China, for sure, is that they'll want to try to stimulate things as much as possible. We had Goldman saying that this means, I don't know if we want to call it a silver lining yet, but this certainly means that China will have to start to focus more on the consumer. So bigger fiscal stimulus into next year. So it's a bit of a mixed bag all around the world. And central banks are already making comments about potentially stepping in, kind of guarding the currency. We saw some signs of that yesterday with China and India as well, with traders telling us that. So there's already action taking place.
Yeah, I think RBNZ did chime in saying that that a Trump win could be inflationary. And we're seeing that being reflected in the stronger dollar, obviously, as well. You mentioned that maybe China may still be able to cut rates or at least stimulate. Are there central banks you're watching out for that might be really constrained by that stronger dollar and maybe have to lean more hawkish now?
Yeah, absolutely. There's, the problem for a lot of the central banks in Asia right now, it's a very different picture than it was in 2018, 2019. We have a lot more of the Asian economies that rely on trade with China or with the U.S., depending on kind of the path that they chose in light of the trade war in 2018, 2019. But I think it also makes it a lot more complicated because of their currencies. Yes. So a lot of the Southeast Asian economies are incredibly worried about currency depreciation. And so they have to now balance these maybe dual or triple risks, right? So you have a trade war kicking up, you have the U.S. versus China, and then on top of that, if you start easing, well, what happens to your own currency? So there's a lot of complicating factors for central banks, unfortunately, with the Trump sweep.
All right, Katya, thank you. Katya Dmitrieva, our economics correspondent, with more on that. And it's interesting, right? That big take today really just talks about the pressures that the Fed chair is going to face this meeting, right? Just fresh off this Trump win. For terminal subscribers, you can read it at NI Big Take Go at Bloomberg. But they basically said, look, the first few hours, easy. They're going to cut rates. Yeah. But it's the press briefing when he's going to be grilled on questions on what a Trump win means for rates, for inflation, for growth. That's when they're going to hit a little bit of a, I guess, messy situation because they don't want to talk about politics most of the time, but they might have to.
Well, let's see how wide his vocabulary is to be able to smoothen out the message. Not to mention, over the next 4 years, keep in mind that Donald Trump, in his first presidency, put a lot of pressure on the Fed.
And whether J.P. Powell will have a job. We'll see. But I think J.P. Morgan had an interesting note. They said, look, today will be, this week will be fine. They're going to cut. Yeah. December they still might have the chance to cut. Right. I think it's beyond that, when you go beyond December, when things start to get interesting for the Fed. Okay. Well, stay tuned for our coverage, of course, of the Fed coming through. We'll be live, of course, Bloomberg surveillance at those times on your screens as we look ahead to, of course, the November rate decision out of the FOMC. Right. From that pivot, let's pivot to crypto. Yeah. Still talking about these Trump trades, right? And yes, we're seeing a little bit coming off some of the record highs we saw with Bitcoin, but we're still talking about 75,000 and change for the cryptocurrency. And that, you're still seeing most of these cryptocurrencies doing very, very well. Ether's up some 5%. Your Bloomberg Galaxy crypto index is surging still some 10% as well. So that obviously is a big sort of tailwind, given what we've been hearing from Trump and the fact that, Elon Musk, who has also been always been very active in the crypto space as well, that is certainly helping as well. Let's cross over to Singapore and talk about that, where central bankers, regulators, and executives from the digital asset industry are attending the annual Singapore FinTech Festival. Our very own Avril Hong is there, standing by with our next guest. Avril.
Absolutely, guys. I mean, we're seeing crypto, one of the big winners of this U.S. election cycle. Bitcoin's pretty much gone through the roof. What is Trump going to mean for the industry, the big players, for regulation? Joining me now, Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. Great to have you with us.
Thank you. Great to be here.
There's a lot of optimism, but, we were talking about this a short while ago. What is your sense of actually execution of pro-crypto stance versus the rhetoric that's been going around?
Yeah, I mean, I think, number one, the election of Donald Trump as the 47th president not only creates an opportunity to make good on long-standing interest both in the Senate and in Congress on a bipartisan basis of crypto legislation. We saw a stablecoin bill pass the House, but never go quite past that point. We saw a market structure bill in FIT 21 also be broadly debated and enjoy bipartisan support. And now the incoming president, has an opportunity to make good on a campaign promise. The other thing I would say is, as an industry, crypto came of age in the United States in terms of political influence. 52 million crypto voters in the United States of America were largely ignored by the polls. And a crypto product, Polymarket, crypto betting, got it right in terms of the outcome of this election, almost down to the wire. And so an industry and a sector that was largely ignored now has an opportunity to look at 2025 with an enormous sense of optimism. Obviously, we're broadcasting from Singapore, and so I would be remiss not to also take a world view, which is that the United States has been absent in terms of regulatory clarity and shaping an industry that enjoys legal clarity and regulatory clarity all over the world, including here in Singapore. And so I think filling that void in 2025 is a big unlock for the industry.
So how much sooner do you think we will actually really see clarity on the regulatory front? Because yes, you know, there are this idea that legally you get the whole framework, but the actual execution, when is that potentially going to come through? The government might have other priorities, and this is something that the Chief FinTech Officer of Singapore actually just talked about as well.
Sure. Well, I think you've already seen, even now in what we call the lame duck session of Congress, you've already seen messages from people like Maxine Waters, from French Hill, who is a senior Republican on the House Financial Services Committee, that they can see a pathway for legislative progress even now in the lame duck session. And it's an acknowledgement that the United States Senate and Congress are not starting from scratch. They're effectively building off of existing legislative proposals. The stablecoin bill, the market structure bills are two real examples in which you could move those forward even now in the lame duck session. Okay. What is clear is the American electorate wants legislative progress and they want economic progress.
For stablecoin regulation, is that a factor for Circle in listing? Is that something you're considering? Because you filed in January this year.
Well, I can't comment directly on Circle's ambitions to go public, except to say that the ambitions have never changed. We've always been very committed to regulatory progress and eventually market progress in the United States as a listed company. What the stablecoin bill does do, however, is that it allows the United States to exert its leadership on a worldwide basis of the critical role the U.S. dollar plays in crypto markets. More than $170 billion of stablecoin circulation around the world references the dollar. And Circle as a company is a digital export, if you will, of the safety and soundness of the U.S. economy. And so legal clarity is an unlock for all of us, including our company.
Do you think, given how you've kind of been very compliant when it comes to globally what we're seeing, once regulation comes through in the U.S., does that give you an edge versus the likes of Tether, for example?
Look, we've taken the view of this is a whole of industry sort of opportunity for growth and for legal and regulatory clarity. Circle was never waiting for the rules to be set in terms of operating with a high standard of trust, accountability, and integrity. When the markets and crypto assets framework became the law of Europe, Circle was the first company across the finish line out of France to ensure that our digital euro product and our digital dollar product were conforming with MiCA. Here in Singapore, we were the very first company in this industry to get a major payments institution license. Right. And so growth follows legal and regulatory clarity. The United States is still an outlier at the federal level, and I think the Trump administration has this opportunity to make good there.
Things could move really quickly, though. Trump has said that he wants to fire Gary Gensler on day one. Does that figure into the equation for your listing plans, the timelines? How soon might we actually see it?
Well, look, I think, again, what we have in our federal regulators, both the CFTC, the SEC, and other agencies, is not so much about people as much as it is about the statutory requirements those agencies need in order to create legal swim lanes between the market regulators, legal swim lanes between the banking regulators, and fundamentally a key feature of American finance is states' rights. In payment stablecoin innovation, the U.S. states are currently the regulators of record of payments companies in the United States of America, but the U.S. is the only country in the world that doesn't have a national payments charter. I think there's an opportunity to look at this as a payments innovation, which is where payment stablecoins and e-money tokens are effectively regulated. They're not regulated by market regulators. It's banking and payments.
Well, what sort of valuations might you be looking at for your listing? I mean, secondary market, I think in 2022 was something like $7.7 billion. It's roughly 4.5 now. What are you looking at?
I mean, again, Circle's a private firm. Our ambitions to go public are broadly known. Right now, as a management team, we're really primarily focused on execution. We're primarily focused on the Cambrian explosion, frankly, of not only payments activity, but integration of products like USDC across the entire spectrum, from household name financial institutions to novel fintechs to developers around the world. Just for example, in the last 24 hours, we've seen an upsurge in USDC growth, an upsurge in the digital euro growth, our euro product, our euro stablecoin. And so we're less focused right now on short-term wins in this industry. We're a long-term company. It's an 11-year-old firm. USDC is a 6-year-old innovation. our collective team and our businesses executing irrespective of short-term outcomes in this market. And that's how you build long-term growth.
Okay, if you're talking about long-term growth, how are you going to be protecting revenues as rates come down?
Sure. I mean, I think the revenue and the rate equation are really critical points of the conversation. The first point, of course, is that you have to have a conservative reserve base for a payment stablecoin to be trusted as a digital dollar. So of course, we're going to follow the influence of the Fed and the rate environment. But at the same time, the rate environment going from a high interest rate environment to a low interest rate environment will also shift towards the payment activity and the velocity of money activity that a product like USDC supports. And so we're seeing partners in Brazil like Nubank and many others are enabling the flywheel of this type of digital currency to start to take effect. As a company, we also have an extraordinary amount of technology offerings that are abstracting away blockchains and ensuring, again, that this end-to-end innovative internet form of money can have alternative revenues associated with it as well.
So it's really about the activity that's going to be taking place. Dante, really good to chat with you. Thank you so much.
Thank you, everyone. Always great to be on. Thank you.
Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle. Guys.
Avril, thank you. Great stuff. Avril Hong there at the Singapore FinTech Festival. If you are one of our subscribers at Bloomberg, here you can catch up on that interview in case you missed that and others that you might have missed. Throughout the course of the morning, or if you even retrace all the way back to this time yesterday, lots of the post-election conversations taking place. Check it out, TV Go. Market update on the other side of this break. This is Bloomberg. There's a reversal taking place, at least currently in the markets. As you can see, the dollar is coming off substantially today. We're nowhere near levels this time yesterday, but it's enough to push equity markets in the region that started the day hungover, let's put it that way, and now, as you can see, have caught their stride a little bit further. Some lines coming through out of South Korea, just worth mentioning here, of course, around the U.S. elections. We also understand that Canada's Justin Trudeau spoke with Donald Trump on trade and also supply chains. More on that in a moment. But yeah, certainly geopolitics, part of the conversation today.
Yeah, and we did speak with the CEO of Dutch medical tech giant Philips, and says that the company is prepared for a potential trade war under a second Trump presidency. The firm cut its annual sales growth forecast last week, blaming weakness in China. But the CEO, Roy Jacobs, told us he's confident of a rebound.
China market is an important market. It's a question of when, not if, they come back. Yes, we go now through some slower market demand, but we are certain that it will pick up again. And then we are really ready also to capture it. Currently is a period that is hard to predict exactly when that's going to happen. Therefore, we also as much focus on growth in other parts of the world, because there are other markets like North America that are very strong and are accelerating both on consumer and in the healthcare space. So actually that's where you need to find an offset for other markets that are showing at this point in time a bit less growth.
So what markets in particular? You mentioned North America. What other markets can pick up some of that slack in what you said was a significant decline in China?
Yeah, so you look at some of the other growth markets. So Indonesia is, for example, a market that with the new government is really looking into investing into healthcare. So that's something where you can find offset. Some other markets in Asia also investing, Korea, Malaysia. Then also we see investments in Europe happening. We see in Spain actually investments in the healthcare system, and also momentum is picking up in the Central European and Eastern Europe region. We see some good momentum. So you see different pockets of the world where you see it coming out.
You said you don't have a lot of visibility about the recovery in China, but how does that impact your investment plans for China, because you've had that significant decline in order intake from China? Does that impact in the next 6 months to a year how much you're going to outlay for China in investment?
We remain very committed to China. Of course, there are certain cost measures you can always take which are more on the discretionary side, where you put that in line with demand. And on the consumer side, for example, you can also pull back on some advertising and promotion spend, because if there's less demand, you also kind of spend less on that. So that you use in other markets. But we remain fundamentally committed here. We have a big presence. We have innovation hubs, 3 R&D hubs in China. We have multiple manufacturing hubs. and we have a very strong local team to service the market. And that remains intact because the market will come back and then we will be ready for it.
How real, though, is the threat of tit-for-tat retaliation on the trade front? Whether it's stemming from the EV front, China is definitely looking at ways to make it hurt for European businesses. It's not just going to be cognac from France or pork and other agricultural products. Could it be medical devices?
We have not seen any of that. Also, what we have made sure in one of the big elements of my plan was to ensure the supply chain is really resilient. And we have been making sure that we can supply regionally. So we supply China and Asia out of Asia. The same we do in Europe out of Europe and Central European region, and the Americas out of America. So that also actually we are prepared for any scenario that could unfold, but at this point in time we don't see anything unfolding yet. So it's too early to speculate.
Philips CEO Roy Jacob speaking with Stephen Engel in Shanghai, our Chief North Asia correspondent. Lots happening in these markets. A reversal is taking place. We're now pointing up across most equity markets. Plenty more ahead. This is Bloomberg.
Time now for a look at what's trending in China. The U.S. election results still a hot topic on Chinese social media this morning. Let's bring in our correspondent, Min Lo, on what you are seeing online.
Yeah, well, people were watching the stock market on social media yesterday, but for the meme stocks, there was a stock called Soft, which in Chinese sounds very close to Trump wins big, and it basically traded up to the limit by lunchtime after the stock rose 10%. And on the other side, you have the Harris meme stock. It was down, I think, over 7% by market close. But on a more serious note, there's also a poll on Chinese social media, Weibo, conducted by a local media, and it asked people how are they feeling after Trump won. And you can see that most people are saying that it really doesn't matter who wins. It's going to be bad for U.S.-China relations. And the next biggest group of response is people saying that we're just watching this for fun. It's going to be interesting to watch the next 4 years. Others also saying they are quite anxious about how the international environment is going to look like. Let's flip the board, take a look at some of the social media comments we've seen so far. Some people are warning of tough days ahead for Chinese exporters looking to make it in the U.S. market. And others also criticizing the U.S. political system, saying that if, it's a system that gives up the 49% for the 51%, that is really a zero-sum game. And lastly, Elon Musk is also trending on Chinese social media. Some people asking, is he going to become the next shadow president or the de facto vice president? Other people saying, is he going to run for president in 4 years later? And this comes, as we know, Elon Musk has huge business interests in China, even as he is one of the biggest political donors to Trump. And so people are saying, how is he going to balance his business interests with Trump's policy? But the good thing they said is that Trump is a deal maker, so it's possible to negotiate with him, and we just have to see how China deals with the blows that U.S. deals with.
Okay, Min, thank you so much. Min Lo, China correspondent with maybe potentially the next U.S. ambassador to China.
A friendly face, though, for Xi, Elon Musk is, right? So that certainly helps.
I remember, was it a couple of months back, right, when China came out with the regulations around EVs and I think driverless technology? Remember that?
Yes.
And Elon Musk had to get on a plane straight to Beijing. I guess underscores really this business relationship.
Yeah.
I digress. I forget where I was going here. Market check in Korea. We're getting some lines coming through here. Still on the elections. Korean defense stocks are flying. Might this be on the back of expectations around what happens with North Korea? I mean, these stocks tend to move quite substantially anyway. Anyway, this is a story obviously worth watching moving forward.
The president had mentioned he's concerned about military technology transfers to North Korea. I'm not sure if that's why things are moving there. But that's it for us here in the China Show. Insight with Haslinda Amin is next. Stay with us.